Hello traders, the title of the video is Mastering Elliott Wave Rules, Part 1. In this short tutorial, I will explain to traders the first step to mastering the Elliott Wave rules. So, I need to explain to traders the reasons why I'm recording this video is because it's quite easy to learn and to master the Elliott wave principle. However, to put into use the Elliott wave principle is quite challenging. Therefore, I want to explain to traders how they can master the Elliott wave rules, how they can implement the Elliott wave rules for day trading, swing trading, position trading, and also for investing purposes. Talking about the first step, one of the Elliott wave rules stated that the impulse waves can be subdivided into 5. It's very simple, it's straightforward, and anybody can understand that if we have an impulse wave, that impulse wave can be subdivided into 5. As a day trader, swing trader, position trader, an investor, what can we do with that specific Elliott wave rules? That is the first step to mastering the Elliott wave rules. All right. So the impulse wave can be subdivided into 5 subwaves without any Elliott wave violation. So whenever we see any waves that is subdivided into 1, 2, 3, 4, 5, and the third wave is not the shortest wave, and the fourth wave is not overlapping the first wave, and the second wave is not cancelling the first wave, we have an impulse wave. It's very simple, and I think everybody can understand that. What can we do with that Elliott wave rule? Very interesting, all right? So whenever you understand that principle, that all impulse waves can be subdivided into 5 waves, it means that when you see the first wave, and the first wave is an impulse wave, or the first price move is subdivided into 5 minor waves without any Elliott wave violation, it means that there is a high chance that we may have a trend in the direction of that first wave. So if that first wave is bearish, there is a high chance that we may have a bearish trend. If that first wave is bullish, we are likely to see a bullish wave. It also means that if we count 1, 2, 3, 4, 5 waves, and we have an Elliott wave violation, it means that we are in a correction. So a correction is always correcting an impulse wave, which means when we see 1, 2, 3, 4, 5 waves, and one of those waves are violating the Elliott wave principle, meaning that we are dealing with a corrective wave, we want to ask the question, what is that corrective wave is correcting? The next thing that we can deduce from that simple rule is that when we have an impulse wave without any Elliott wave violation, the second wave is likely to be a corrective wave. So you are counting where you see 1, 2, 3, 4, 5, and you see you analyze the structure of that wave. It is a clear-cut impulse wave. There is no Elliott wave violation. You can deduct that the following wave after that impulse wave is likely to be a correction, meaning that that correction is likely to, that correction should not come to the beginning of that impulse wave. Am I making sense? If we identify if you identify a valid impulse wave, we can deduct that there is a high chance that the second wave, the following wave, is likely to be a correction. So that's why we see first wave, if it's an impulse wave, the following wave is likely to be a correction. Third wave is an impulse wave, the following wave is likely to be a correction. Fifth wave is an impulse wave, the following wave is likely to be a correction. So when we identify an impulse wave that is subdivided into 5 waves, we can also deduct that the third and the fifth minor waves of that impulse wave can also be subdivided into 5. Am I making sense? So you see here 1, 2, 3, 4, 5. No Elliott wave violation. If we go to the next lower time frame, we can see that there is a high chance the third minor wave and the fifth minor wave is also likely to be subdivided into a 5 minor wave. The next thing that we can also deduct from the impulse wave rules is that when we see an impulse wave that is subdivided into 5 minor waves, there is a high chance that after the second wave, we are likely to see an impulse wave again. So an impulse wave followed by a corrective wave is usually followed by an impulse wave. Did you get that? An impulse wave followed by a corrective wave is likely to be followed by another impulse wave. Not guaranteed, my friend. Not guaranteed. Likely. High probability that when we see an impulse wave without any Elliott wave correction, and we recognize that the following wave, the second wave of that impulse wave, or the following wave after that impulse wave is also a corrective wave, we can predict that the third move, the third price action is also likely to be an impulse wave. It's not guaranteed. Likely. But if the first wave, we have an impulse wave followed by, a second wave that is a correction, there is a high chance that we may have the third wave that is also an impulse wave. Are you getting it now? Is it making sense? See how I want to make it very short, so those are what I call focus videos. So I got 1 minute left. Are you getting it now? So if you see 1, 2, 3, 4, 5 followed by a correction, we can predict that the following wave is likely to be an impulse wave. It's not guaranteed. That following impulse wave, which is the third wave, is likely also to be subdivided into 5 waves. If we see an impulse wave, and that impulse wave is the first wave or the first move or the first price action followed by a correction, we can predict that we are likely to see a trend in the direction of that first wave. Because the trend, if there will be a trend, the trend is always in the direction of the first impulse wave. So if you have done a bit of math, you understand what I'm trying to do here. So we know about the Elliott wave rules. Now, if you want to go a little bit deeper, we will start doing what we call deduction. Have you done math before? You remember this sign? All right. Just to refresh your memory, for those of you who have done a bit of math, remember this sign? This is it. We deduct something. So there is the Elliott wave rules. Anybody can go on the web, label the Elliott wave rule. But now when we come to practical application of a specific Elliott wave rule, we need to apply what we call the deduction of the Elliott wave rules. So we can do a lot of things with the Elliott wave rule, just knowing about an impulse wave is subdivided into 5 waves. So now that we are talking about the deduction, this is so deduction, yeah. So this is what we call a deduction. The rule stated something, we deduct something. But suppose we can go a little bit deeper if you have done a bit of math. If what the deduction is an expectation, suppose what we are expecting did not happen, what can we deduct from that thing? So this is about the negation of our expectation. So we are expecting something, we deduct something, but what we deduct, what we were expecting is not happening. So if what we are expecting is not happening, what can we deduct from it? So the question is, if you see 1, 2, 3, 4, 5 impulse wave, first move, and you see a correction, and the following wave is not an impulse wave, what can you deduct from that? Because your expectation was that you should expect another impulse wave. But suppose the following third wave is not an impulse wave, or the wave after the correction of that impulse wave is not, okay, the wave that is following the correction is not an impulse wave. What can you deduct from that? You will deduct that at the end of, if the third move is not an impulse wave, we are likely to see a reversal. Probability that we may see a correction. We can also deduct that the move from here all the way up here is not a trending phase, is a corrective wave. Is it too much for you, my friend? Too much deduction for you? All right, let's see how long I'll be talking to you. We want to keep it very short so you don't get fed up with me. Now, you have to understand what I'm trying to do here. I want to give to traders the tools that they can use to make their own decision. That's all. Now, when we are talking about a correction, so when we have an impulse wave and a correction, if the correction did not come all the way to the beginning of the impulse wave, we will say that there is a high chance that the move, the first move, is likely to continue, provided the correction did not come to the beginning of the first move. So you see, we can do a lot of deduction from just the definition of what is an impulse wave. So if you have an impulse wave followed by a correction, and the third move is also an impulse move, we will deduct that there's a high chance that we may see another correction, because an impulse move is always followed by what? A corrective wave. This is very important. An impulse wave is always followed by a correction. And if that correction does not come to the beginning of the impulse wave, we will expect a correction. Or, no, sorry, we will expect a continuation. So if you see an impulse wave, and the impulse wave did not come to the beginning of the first impulse wave, we will expect a continuation in the direction of the impulse wave. The impulse wave is always in the direction of the bigger trend or the bigger move. There is a move that is underway, and we analyze the structure of the first move that will give us the direction of the move that is likely to continue. Now we need to examine the second move. Is the second move a correction? If we see a second move that is a correction, we can deduct that the third move is likely to be in the direction of the first move or the previous impulse move, and we need to talking about probability. But if the third move is not an impulse move, we'll expect a reversal, or we will think of what? A correction. All right? We don't want it to be too long. We leave it there, and we'll continue. I'll invite you now to follow me into the next video when I will be talking about mastering Elliott wave rule, step 2. See you in the next video. If you have any question or suggestion, put in the comment section, and in due course I will be recording another video to answer your specific question. If you like this video, please give us the thumbs up. If you think that it's another useless recording, mark it down. If you think that it's another essential tutorial, feel free to share with your friend on Twitter, on Facebook, and also on Google+. Happy to meet you all, and speak to you soon. We are the TSTW24 traders talking about mastering Elliott wave rules, step 1. See you in step 2.